Hi, this is Joe at Blue Crow Trading. I want to spend a few minutes illustrating an example of how to use the major and minor bull and bear targets. And today is the 22nd of May. It is 3:24 p.m. The market hasn't closed. Things are still moving around in here. But let me pull over the Twitter account. I usually share my thoughts as the day progresses on Twitter. So here we are at about this time over here. So the exact time was at 119. I mentioned we're on a minor bear target at the moment with a supply auction taking place. We could pull back to a major bear target of 36.4450. And then there was another comment that I made just above that, which was if the following scenario doesn't play out, then 36.59 is the next minor bull target. So this is looking at it retrospectively. I put these comments out there so that I keep myself honest, and I stick to those calls that I make, and to what I mention out there in the trading community. And let's see how it panned out. Now, this doesn't mean that I have a crystal ball. It just means that the major and minor bull targets that we're working with at Blue Crow Trading are high probability exit areas, and with an emphasis on exit, because one is not entering in these areas, and one is holding on to trades until they reach that spot. On the chart. So the first comment that I mentioned was at 119, which was around this time over here. Let's just get it. 119 was here, just inside of that area of consolidation. What I mentioned at that time there, that we're on a minor bear target, which is this thin blue line over there, that a supply auction was taking place. And what a supply auction is, it's many sellers selling to a few buyers. And that supply auction, clearly the visual stimulus over here is that there's a retracement taking place, selling is taking place, there's a momentum that built up here, pullback, and a continuation of the trend down. So this is a supply auction. And I mentioned that we could pull back to this major bear target over here, 36.4450, or alternatively pull up to this major bull target of 36.59. Well, the second of the scenarios that I mentioned on Twitter panned out, and what happened here is that this happened all the way to the top here. So price continued its very slow creep all the way up to the top to 36.59. Now the time from when I mentioned that the next bull target is 36.59 to when it actually achieved it, so that was at 119, which is around there, 119, up to that point, which was 3 p.m. So we're looking at about 1 hour and 40 minutes just simply for that price action to take place. Now, that's a very long time to be in the trade, and you've got to have the confidence to be able to stick it out all the way to the top, not thinking that perhaps it's going to retest that high and pull back, or retest that high and pull back, or retest this high and pull back. But the next logical target would have been 36.59, and knowing that, and if you subscribe to the intraday targets that I put out there for the NQ and the ES, you would have known that is the next target, and if you are holding a trade, that's where you're going to be exiting. And as soon as that hits that target, 36.59, what happens? There's a sell-off that's taking place. So what? Just a mild correction, not a major sell-off, nothing like that. And what is happening over there? Institutions and smart investors or traders are letting go of their long positions at that point. So that's all it is. And we know this because we will calculate the minor and major bull and bear targets during the day. So these are high probability exit areas. Anyway, that's just a quick example I wanted to share with you. Please take a couple of moments to visit bluecrowtrading.com, where we share our work, particularly around the intraday targets and also the 13 elements of trading success. Thanks so much. Take care. Bye.